Hi, today we're going to be talking about the UK, investing in the UK government bonds and treasury bills. What are UK government bonds? UK government bonds are debt securities issued by the British government to raise funds. They're popularly known as gilts, while the treasury bills are also debt securities issued by the government. They are both the bonds and the treasury bills. They come with several quality. Durations are different, amounts are different, their types are different and all that, but they are both government issued debt securities. So let's quickly dive into it. My name is Temi, and I'm a finance strategist. I'm a financial independence, retire early strategist, and I've had over 20 years of experience in both financial and investment transaction services. And on this channel, we talk about personal finance, we talk about self-development, we talk about wealth creation and management, we talk about retirement planning, and we also talk about investment. If this resonates with you, please kindly click the subscribe button. We want to thank all our subscribers and everyone that keep coming in to watch our videos. Thank you so much. Let's dive into the business of the day, investing in UK, treasury bills, and government bonds. So what are the qualities of the government bonds, UK government bonds? So these government bonds, they are usually considered as one of the safest investments because they are backed up by the UK government, which has long history of credit ratings and long history of honoring its debts. They are usually considered the safest in the environment. We have the returns that are fixed, and we also have the returns that are linked with inflation, like inflation-linked returns. Gilts offer predictable interest payments, usually known as coupons. We have the fixed rate gilts, in which they pay biannually. They pay biannually. They pay their coupons biannually, and it's fixed. And we have the one that is index linked gilts, in which the coupons are invariably linked to inflation. So the payments rises with inflation. So we have the ones that are fixed, and we have the one that is linked actually with inflation. The ones that are index linked with inflation, the index linked gilts are usually, they protect your buying power, because as the inflation rises, also your return also rises. Also, another quality with the bond has is regular income. Gilt typically pays interest semi-annually, so it's very good for people that are planning their retirement. It's a very good source of passive income for people that want passive income, provided they're retiring from their active services. And it's also a good source of side income, in which probably you are working but you still want additional income and all that. So because it's always fixed, and the UK government has a long history of paying their returns, in terms of liquidity, UK government bonds are very large and very active, which makes it easy for you to exit or enter into the market. And it's also very liquid, which makes it easy for you to buy it, which makes it easy for you to also sell them. Also, and we have varieties of UK government bonds, which you see on your screen. We have the ones that come. It can be 2 years, 5 years, 10 years, 30 years, 60 years. You can hold it as long as that, and it continues to pay you biannually. You don't have anything to fear or anything to worry about and all that. And because of the currency strength, because your investment is exposed to a very strong currency, and also it provides a currency diversification for you. If you are outside the UK, you can invest in this through your apps and all that, and affords you currency diversification also in your investment. And it's very transparent, and it's really regulated. Gilts are issued and managed by the UK Debt Management Office, which is the DMO. Who are the suitable investors that should have this in their portfolios? Probably the pensioners. You can add it to your pension funds. You can add it to your retirement portfolios. It's also good for low risk investors. It's also good for people that want additional income. So we now move to the treasury bills. While we have the government bonds coming in 2 years, 3 years, and it pays you biannually, the UK treasury bills, as you are seeing on the screen, is also debt security issued by the government to raise funds, but it comes every month, like every month. So your returns are monthly, just like you're seeing on your screen. Your returns are monthly. So if you invest in the treasury bill, you're going to get your returns every month and all that. So you can continue to invest, though, as long as once you clock in into you're clocking your investment and all that, it will tell you when the investment is going to kick in and tell you all the history and all that. So you'll be able to invest into it and you get your money every month. So it's something I can be doing every month as long as it's active. I continue to do it, invest in the UK treasury bills every month as long as it's active. And it's usually within a month, or like the bonds that are maybe 2 years, but it's going to pay you by annually. So it now depends on the kind of investor you want to be. Investor, it depends on the kind of investor that you are, whether you want to be earning it every month, and you now consider also the interest rate, what is going to be the return on this UK Treasury bill, what's going to be return on the federal government bond, on the bonds, because they are both low risk investments backed up by the UK government. So you can make your decision based on probably cash flow or probably the interest yield and all that and all that. So where can you find all this? Where can you find them? About the UK bonds, exposure to either the UK bonds or the US bonds and the treasury bills. We have a lot. We have also the corporate bonds. The corporate bonds are actually the bonds that are issued by the corporate body to raise funds from the market and all that. The interest rates are usually very high. The interest rates are usually very high. So you can decide to go for the corporate bonds if your risk appetite is very high. You can decide to go for the corporate bonds, just like the one you are seeing on the screen. Corporate bonds, you can have the SHYU. You can also have the VUCH, as you're seeing on your screen. They have a very high yield. Some of them, their yields are probably higher than 5% and all that. So you can decide to go for that. I can decide to go to, if you are less conservative, if you are more conservative, and you can decide to go for the one issued by the government, depending on, there's no investment without its own risk. You can have the one with the low risk, you have the one with the medium risk or the high risk and all that. So for the bonds also, the bonds you can invest directly. Whether in the UK you usually invest directly with the DMO office, the debt management office, but now you can't invest with the debt management office directly again. You have to go through either a stockbroker or you go through your brokers and all that. And you can also invest through ETFs. You know, and the brokers, some of the brokers, the ones that are duly registered with the government, the one that are duly registered with government, like maybe the eToro, the duly regulated, we're talking about brokers that are duly regulated and duly registered. So you can also do your due diligence. But all the bonds and the bills I'm going to be showing you, you can find them on either the eToro, the investment engine, Vanguard, Fidelity, Charles Schwab. You have all of them. Free trade. Free trade, and there's another one that usually invest in treasury bills. You can invest in treasury bills directly with free trade, just like you're seeing on your screen there. And also, so for most of the bonds, you can invest also through ETFs. Now, the SHB, as you are seeing on your screen, is an iShares short treasury bond ETF, and this seeks to track the investment result of an index composed of US. So you can also invest in high EF. High EF is an iShares 7 to 10 year treasury bond ETF. You go into any of the apps and you press Gilts, just like you're seeing on your screen right now, you see all the Gilts, all the active Gilts that UK has. You see them. You can pick any one of them, the one that suits you. Just read about them, go about them, find out, do your due diligence about them, and then you can pick the ones you want. You can use apps maybe like Free Trade, like as long as they are duly registered with the government. Then you can use Free Trade, you can use Vanguard, you can use Charles Schwab, you can use Fidelity, so many of the brokers that we have out there. So let's continue with the bonds. Now, the next bond is FBND. FBND is a bond, is a Fidelity Total Bond ETF issued by the Fidelity, and it's an actively managed broad market bond. This one, the FBND, is issued by Fidelity. The BND, we also have the next one. It's called the BND. The BND is US Total Bond Market Index, and this is issued by the Vanguard. You can also see that also on your broker's app. And the next one is SEHO. SEHO. This is issued by Charles Schwab. It's an ETF also by Charles Schwab, and it's also a short-term US Treasury. All these bonds and all these Treasury ETFs that I'm mentioning is not a financial advice. Financial advice. It's for you to just have an idea of what we're talking about, like where you can find this, what they look like, if you see them and all that. We have a lot of all these bonds that are paying you, but the fundamental and the underlying thing there is that these bonds pays you consistent income. So if you want to be having passive income, you can decide to go for any of these or combination of these, whether you're living in the UK or you're living in the US, for you. And for the corporate bonds, just like we have mentioned earlier, we also have the corporate bonds. You can decide to go for the corporate bonds. For the treasury bill, if you want to invest in treasury bill directly, you can decide to go through Free Trade. You see the treasury bills and you can invest at any day, and that's on the general level. You won't even have to pay for any charges or any monthly subscription and all that for that. So these are invariably all the corporate bonds. Either you want to invest in corporate bonds, either you want to invest directly using maybe free trade or other apps and invest in treasury bills, or you want to invest with the ETFs that are invested in the bonds with the UK government or with the US government. So either way, whether you want to go with the one with the Charles Schwab or you want to go with the one with Vanguard or Fidelity, we have different type of ETFs, just like I've mentioned earlier. So whatever it is, as long as it synchronizes along with your financial goals and with your, with your strategies and all that. But the aim is just for us to be able to invest in all these bonds so that we can have passive income that comes for us, and low risk passive income that comes to us every maybe biannually for the UK government and for the US government and all that. So, or we have the treasury bills that pays every month. So the aim is just for us to be able to achieve passive income that comes in for us consistently. I hope this video has been able to do one or two things for you. Please give us a thumbs up and drop in your comments and all that, just to encourage us to be able to produce more of these videos and for it to be able to reach as many as possible people. Thank you very much for sticking around. Thank you very much for watching our video. Have a very lovely day. Thank you.